Ladies and gentlemen, welcome to BSV TV. I'm your host Satoshi, and on this show we'll be defending the one and only, truly genuine Bitcoin. The Bitcoin that Satoshi Nakamoto designed in his white paper as a peer-to-peer electronic cash system for the world. Let's get the disclaimers out of the way. So all the statements that you hear on this show are opinion and must only ever be taken as opinion. They are never to be taken as any form of advice, family, financial, sexual or otherwise. And on that note, let's sit back, relax, have some fun and enjoy the show. Get paid for your content in Bitcoin and set your own fee on Streamanity.
Yeah, I'm not surprised I wasn't asked why I'm convinced Craig is Satoshi. I posted on Reddit. He signed in my presence using the private key from block number one, the very first mined Bitcoin block. On a computer that I'm convinced had not been tampered with, on software I'm convinced that had not been tampered with, a message of my choosing.
At InChain, we've just funded a number of universities doing, so far, a test up to 1 gigabyte because it validates what we've already done independently. We've tested up to 380 gigabyte blocks. We've tested 1 million transactions a second and transaction sizes up to 20 megabytes. Super complex scripts. Basically ones that can run operating systems. That's all of global commerce times about 50. On top of that, we can have complex scripts. On top of that, we can scale each of those transactions 1,000 times, which effectively means about 1 billion transactions per second, which means we can then have all derivatives, all complex trades. That means high frequency trading. It means everything that happens globally.
Is the market that effectively BSV is going for, is that global e-commerce, which is currently valued at $29 trillion?
No, that's too small.
Buy and sell Bitcoin instantly at bsvgravity.com. And you can now book and pay for your winter holiday at skibsv.com. Alrighty people, it looks like we are live. The time is just before 5 o'clock. Today's date is Saturday, the 31st of July 2021. Let's begin. Welcome to Satoshi TV, aka Bitcoin is VTV, aka It's Just Bitcoin. That's all we need to know. So let's just jump straight into a little bit of gossip. I'm meeting a client later on, so literally just going to have to wing this one today. But you know, there's always stuff going on. So now you can see sort of like what I do normally before a show, you know, kind of like just going through these different things. Oh, which articles do I want to look at? Which ones look nice and juicy? Yep, seen those already. Let's have a look at this. They're the editorials. Oh, look, we might actually be up to date on stuff. Press releases, yeah, and all that. All right. Okay, let's go back to business. Let's have a look at this one then. Start off with Kazakhstan allows banks to serve digital currency exchanges. Oh dear, somebody's going to regret that. Digital currency companies, including exchanges, will now be able to open bank accounts and access all financial services in Kazakhstan. Borat's going to love this. In a poll project, the Asian country is seeking to make digital currency investment mainstream to attract investment from global community as well as enhance protection for its local investors. Kazakhstan has attracted the attention of the digital currency world in recent months as one of the biggest destinations for block reward miners that are being booted out of China. The country has also seen a rapid surge in digital currency adoption. And now authorities are seeking to enhance access to financial services for the industry. The Kazakh Association of Blockchain and Data Center Industry confirmed recently that exchanges that register with the Astana International Financial Center will be able to work with local banks. This will allow their clients to officially and openly work with cryptocurrency. A report by Kabar24, a local news channel, revealed that the government is planning on using the pilot project to assess the risks and benefits of digital assets. It will run for a year, according to the Sergey Putra, an executive at the Blockchain Association. Sergey lauded the move, stating that it was about time the government became more involved in digital currency industry. Kazakh citizens have already become quite involved in digital currency trading, he observed. In addition, the country has become an important destination for block reward miners. Sergey further noted that the regulating the industry could attract digital currency investors from the world over, with the industry now worth over $1.5 trillion. Quote here, even if Kazakhstan takes some fraction of this market, even 1% of its turnover, this is serious money that will come to Kazakhstan in the form of investment, and it will remain here in the form of taxes, in the form of jobs and salaries. This is a very large industry which Kazakhstan still bypasses, he observed. The new directive comes at a time when the Central Asian country is working on a roadmap geared towards adoption of digital currencies and blockchain technology. Prime Minister Askar Mamin expressed his plan to attract companies in the sector and compete with other global powers like Switzerland and Malta, which are advancing rapidly in digital currency regulation. Wow, another country joins the foray. So now we've got Kazakhstan. I'm telling you, we're watching the dominoes coming in. I mean, it's just going to be an absolutely fascinating space to be a part of. Seriously, yeah, it's amazing. And let's have a look at our favourite shitcoin news network, the Coin Telegraph. What's this? Bitcoin Supercycle sets up Q4, whatever. If you have a Bitcoin miner, turn it on. Okay. Coolcoin for cash. Do crypto ATMs make buying BTC easier for the mainstream? Who cares? Coolcoin records rare 10-day winning streak as BTC price taps 42k ceiling. Ugh, absolute crap. People are going to lose so much money. The future of DeFi is spread across multiple blockchains. That's hilarious. What an absolute load of crap this is. Let's see what this says then. So as the decentralized space is growing at lightning speed, projects need to adapt to the multi-chain future or risk becoming irrelevant. Oh dear, oh dear, oh dear. Barking completely up the wrong tree. Oh my goodness me. Long stuck in the shadows of Coolcoin, Ethereum finally took hold of the market in 2020 during the decentralized finance summer. Designed to recreate traditional financial systems with fewer middlemen, DeFi is now being used across lending, borrowing, and buying and selling of tokens. The majority of these decentralized applications, dApps, are run on Ethereum, which saw activity on the network increase during 2020. This actively also trends upwards due to yield farming, also known as liquidity mining, which enables holders to generate rewards with their crypto capital. Absolutely shit. Ponzi schemes. The whole lot. The whole lot. But as the activity on Ethereum increased, so too did the network's transaction fees. Yeah, dole can't scale. In May, it was reported that the Ethereum gas fees were skyrocketing. It's intuitive that engaging in DeFi is only worthwhile when handling capital that exceeds any network fees. Consequently, it soon became clear to users that the blockchain was verging on unusable. Absolutely. In fact, I've got my little collection of short videos here, so let's just have a listen to the founders of Ethereum admitting that they knew it couldn't scale before they even released it. Where is it? Come to Papa. No, it's around here somewhere. Here we go. Let's play this just for lulz as we're here, because this never ever fails to amuse me.
It scales somewhat.
Initial plans or initial
yeah, we knew it wasn't going to be scalable for sure.
Oh dear, crazy. Without doubt, Ethereum remains the most active and populated blockchain, but other potential players are popping up, providing a viable alternative to Ethereum. For example, layer 1 protocols such as Binance Smart Chain. Oh dear, it's a completely centralized project. It is going down. And Solana, proof for history. What's that? There's no competition between the nodes that support the network. It's crazy. Are attracting billions in assets under management, whereas layer 2 solutions such as Polygon, Matic, are capturing Ethereum's disgruntled users' attention due to their compatibility with Ethereum-based protocols. This is in addition to delivering low fees and quick transaction speeds. However, despite Ethereum gas fees reaching a high over the past year and the growth of faster networks, none of these chains have killed Ethereum yet. Bitcoin will, I'll tell you that much. It's because of this that we enter the second half of 2021 that the narrative of Ethereum versus the rest is starting to change. Developers are realizing the value of a cross-chain future, oh dear, rather than... what happened to this decentralized single ledger? DLTs. This is hilarious. The whole point is having a single ledger. Good grief. So developers are realizing that it's the value of cross-chain future rather than having to pick up one blockchain to build on. It's no longer a case of creating a chain with a competitive edge, it is actually, but of ensuring all chains can work interchangeably to improve the industry. No, that's such a fail. Good grief, they have no idea what decentralization means. Benefits and drawbacks of a multi-chain future. Due to its prominence and long-standing presence in the market, Ethereum has the first mover advantage and remains the most significant blockchain within the DeFi ecosystem as of Q1 2021. Oh dear, the whole lot. They're going, oh, it's digital gold and Ethereum's like a network computer. Bitcoin is everything. Everything. But with other chains gaining momentum, it is these alternatives to Ethereum that are providing the benefits of faster transaction speeds and significantly lower fees. The introduction of other chains isn't necessarily a bad thing. Yes, it is. Even for Ethereum fans. After all, a multi-chain ecosystem brings additional space for new protocols to enter, each with a strong user base. Each new chain also creates a new community of vacancies for services and an individual identity and culture. Centralization. It's so stupid. There is no value in any of these centralized networks whatsoever. It's crazy. One possible drawback, depending on how you look at it, is that some blockchains require unique programming languages such as JavaScript, Rolang, Simplicity, Rust, or Solidity, which may present a barrier to entry for developers. At the same time, however, different coding languages can present a new way for developers to solve a problem. And as the blockchain space moves further towards multi-chain, it can inspire developers to create and innovate as they witness the diversity in viable blockchain projects. It's all coming to Bitcoin. The whole lot is coming to Bitcoin. This is absolutely insane. I've never heard such. Well, it's just unbelievable crap. I mean, the ignorance here is just unbelievable. It's for this reason that the projects which don't innovate could be seen as lagging and abandoned by their community. Yeah, it's competitive. Speed, cost, and scale. It's a medium of exchange. Is a tool that enables, encourages, and accelerates the facilitation of trade. Therefore, people will just simply use the tool that facilitates the trade in the best way, which is the most scale. Well, yeah, the cheapest, the fastest, the biggest, the strongest. Speed, cost, and scale is crazy, and they don't know this. Not only that, but separate blockchains create innovation silos, bollocks, presenting challenges to progress and adoption. Joining the multi-chain future together can be seen as seamlessly connecting these specialized groups. Totally delusional, absolutely delusional. This could be seen as a difficult objective to achieve in the traditional tech world, but cryptocurrency and blockchain are challenging these existing infrastructure monopolies, and the industry has the ability to pioneer an ecosystem that works cohesively rather than competitively. They have no idea what they're talking about. This is crackers. More blockchains, more value. Oh dear. It's inevitable that projects will inevitably connect multiple blockchains. No, it's not. Completely wrong there. Making the transfer of information from one chain to another seamless. In fact, the cryptocurrency market and multi-chain adoption is less of a zero-sum game than is often cited. No, completely wrong. And as the multi-chain future becomes more apparent, it will only become clearer that the additional functionality, usability, and scalability it brings is contributing to the onboarding of new users. They are so lost in their understanding. It's crazy. Rather than viewing the existence of a multi-chain future with doubt, it should be looked upon positively. No, that's a massive fail. This is crackers. There are plenty of different smart contract platforms in the ecosystem, all of which impact the blockchain space in terms of accessibility, economic validity, and innovation. Blockchains may be separated right now, but everything will come together in the end, yeah, on Bitcoin. Creating an interoperable and fast network of protocols that fulfills our daily needs. No, totally wrong there. The beauty of this is that we won't have to worry about how we're transacting or what we're transacting on, as it won't matter. We're still far from achieving the end goal of interoperability, but once it's achieved mass adoption, the crypto industry will be unstoppable. And as the sector continues to grow, projects are finding that they have to adapt to a multi-chain future soon or risk getting left behind. Dear oh dear, dear oh dear, delusion and ignorance and cognitive dissonance is just shocking. Honestly, it's shocking. Wow. Yeah, never thought I'd read an article as crazy as that from a platform like Cointelegraph. They have no idea. I mean, it just goes to show you how far ahead we are here in Bitcoin, to be honest with you. But Yeah, crazy stuff. Binance completes Polygon wallet integration. Oh dear. You have a Bitcoin miner turn it on though. A trade war. A trade war misstep. China is vacating crypto battlefield to US banks. Oh dear, oh dear. I mean, this is just absolutely insane what we're reading here. I mean, let's just read this one about Cardano, just for lulz. Just because we can hear the absolute just insanity here. Cardano risks 60 to 90% drop, warns trader with ADA painting a classic bearish pattern. Spotted by veteran analyst Peter Brandit, again another shitcoiner, the classic technical pattern can result in ADA price losing almost 90%, along with every other shitcoin going to zero. Cardano is close to attaining the title of a fully fledged smart contract platform following a critical upgrade in mid-July. So what? As upgrade after upgrade after upgrade, it doesn't do anything to the problem. It's a completely centralized, utterly bullshit project. An exit scam by Charles Hoskinson. The project's founder, Charles Hoskinson, confirmed that they recently processed the sale of more than $10 million worth of non-fungible tokens atop their public ledger. And again, those non-fungible tokens aren't even going to exist once IOHK can't mine it, and proof of stake is a security anyway. I mean, it's crackers. Moreover, Sunday Swap, the first DeFi DEX to utilize Cardano's smart contract, is expected to launch soon, and many ADA investors interpret this as a potential bullish catalyst for the altcoin. But the Ethereum rival's growth as a project might not lead to higher adoption for its native cryptocurrency ADA, at least according to an analysis shared by Peter Brandit, the chief executive of global firm Factor LLC. See, look, I mean, he's a chief executive of a global firm, Factor LLC, and he's not got a clue. Not got a clue. Absolutely nuts. So a 60 to 9% crash ahead for all the cryptocurrencies because they have no value whatsoever. The data on them isn't safe. That's what it's all about. That's what people don't get. The whole point of Bitcoin being a commodity is that the data is secure. None of these central projects have secure data on them. It's crackers. The veteran analyst shared a bearish setup for ADA in a tweet published Friday. He cited a classic technical pattern known as head and shoulders, cock and balls, all this crap. You know, ascending triangles, magic carpets, crystal balls, magic tea leaves. Absolutely crazy. To predict a downside scenario for the Cardano token, that is already up more than 600% on a year-to-date time frame. He detailed Head and Shoulders forms that the price forms 3 consecutive peaks atop a single support level. I can't even be asked to read the rest of it. It's absolute crap, utter crap. Hold on one sec. Yeah, there we go. Sorry about that. Just had to answer the door. So yeah, that's all those articles on Cointelegraph. I mean, my goodness me, you know, they have no clue. I mean, it's going to be a real shock to the system when it comes. And when I say a shock to the system, I just want to have a look at this quickly. Look at this. So this is the CMC, like the coin market cap. So if we look at the market cap here, so look at this. So $1.6 trillion. Coolcoin has got a market cap of 780, but it's only got a 24-hour trade volume of about of 20 billion. Now 20 billion, that's roughly just over 2% of the market cap. So all you need is 2% of the holders, and remember, you know, I'm sure there are many holders out there that have more than 2% of their overall supply. You only need 2% of the market to change its mind that Coolcoin isn't worth anything. And that's it. It's gone. You just simply attack the trade volume, and the market cap of $780 billion literally vanishes overnight. So really, you should be looking at this, the trade volume. That's all you need. So really, the safety is only 2% of its current market cap. That's all you need. Literally, when it goes, it's just going to go like a house of cards, and real quickly, really quickly. Yeah, it's going to be quite devastating, to be honest with you. And talking about being really quickly, my favourite metric, which we're going to look at in just a minute, is the increasing. Look at this block size, 97.2. Oh my goodness me, it is absolutely motoring at the moment. How far are we ahead now? Let's have a look at the chain. 96.25. The growth is staggering. The growth is absolutely staggering that we're witnessing at the moment. Oh my goodness me. So let's just have a look at this. Here we go. Let's have a look at this rate of increase. So this is the daily accumulated Bitcoin blockchain growth by network. Yeah, that's not the one I wanted to look at. I think it's block sizes I wanted to have a look at. So it is this one here. So we broke a record earlier, and I've no doubt this has increased now because we got 97% of the block size. This is nuts. 3 months. Whoa! Look at that. So that we've now got average block size measuring 41.3 megabytes. Look at the trajectory on that. It's mad. This was the previous record, the previous all-time high of an average of 35 megabytes, and we are now at 41. We've smashed that today. Mike, 35 to 41. Oh my goodness me. I mean, this is what is coming, people. This is absolutely insane. Well, as insanely good. It's crazy. It's crazy. Yeah, I've got to shoot in a minute, so maybe choose some other articles. Yeah, it's not hasn't really caught my eye there. Let's have a look at this on BCH. Yeah. You know what I mean? Central Bank of Ireland governor talks crypto, praise security, decentralized technology. So I mean, they're sort of knocking on the door, but they just don't really quite get it yet, do they? You know, Finland looking for brokers to sell seized bitcoins worth $80 million. Oof, you know, people aren't going to be happy really when that goes to zero. I mean, literally, like I said, you only need 2% of the market to change their mind, and BTC is no more. Literally gone. It's crazy, really, when you think about it. But my goodness. Right, folks, we shall leave it there. Shout out to people in the chat box. We've got Keith Fellows, Massadrude, want to become famous? No thanks, mate. Mike Murphy, thank you for joining me. Arcade Rob, yeah, great stuff. Cheers, boys. Thank you for all that. I haven't really got time for ding a dong because I've got somebody at the door who's waiting for me, but we'll leave it there and just keep an eye on those figures. Obviously, let me know if you see anything, and as ever, be aware, take care, stay safe out there. Joy Given, catch you guys later. Get paid for posting your pics on Relica. Download the app now at www.getrelica.com. Get your tweet etched on Twitch, forever on the Bitcoin blockchain. Do it today at www.jointwitch.com. BuyBSV.live, the best place to buy Bitcoin SV online. Support independent content creators on micropayment platforms such as Streamanity, Twitch and Relica. We should profit from our data, not the large corporations who track, monitor and sell it. If you enjoy the Bitcoin content that I produce, please support me by heading over to www.satoshi.tv, where you can keep up to date with all the latest news, gossip and content as it's created. Thanks very much. To get started in Bitcoin, go to freebsv.com, where you can claim your free Bitcoin. Then head over to Twitter and follow @IamSatoshi, where you can take part in his very generous and world famous free giveaways. The future of advertising meets the power of Bitcoin at Tonic Pow. Get paid for posting advertising campaigns to your social media profiles. Go to www.tonicpowads.com.